All right, just 2 minutes, and counting. We'll start pretty soon. All right, good morning, Checkmate crew. It's the opening bell of the New York Stock Exchange at 9:30 a.m. on this beautiful Wednesday, October 19th, 2022. Yours truly, Mickey Blindside here with the market memo. Okay, so last night, or yesterday after the close, I should say, we had Netflix earnings. That seems to be the chatter for the day. Everybody is fixated on this. It did pop. It's popping here at about 10% at the open. I think the news was that they had some increases in subscribers. And so that I think they had 2 subscriber decreases, and then now all of a sudden it increased again. So of course, you know, the retail traders, and I'm sure Wall Street loves that. We'll see if that lasts. They did guide, however, lower. They guided their revenue lower, saying that they have some headwinds from the U.S. dollar staying elevated. We'll see. I think, you know, as I told you guys in June, July, you know, there is an incentive for management to guide earnings lower, especially this time of year. When end of the year option payments and option awards are given out to CEOs and such, you know, if they're awarded lower strike prices on their November, December options awards, then when it comes to January, February, March, when the Q1 or the fourth quarter earnings comes out and they beat it, they're able to get a higher payout. Okay, so we may be seeing some of that. You know, guidance is getting pushed down. It's a very, very old trick, though, so I don't know if it's going to work or not. But I'm sure, you know, the CEOs want to get as much of a payout as possible. So I can see that. We'll see what happens. They did mention the dollar, so let's start with the dollar today. The dollar is going up. This blue line is where the 18-day moving average is. This is where the 2 standard deviation Bollinger Band is. And as you could see, we actually, you know what? Let's go ahead and take a look at the chart that has all these lines on it. So as you can see here, we closed below the 18-day moving average back on Monday. And this would be day 3. So with currencies, remember back in the summer, I told you guys that currencies tend to have this this 3-day rule where when it breaks a certain key level, it can try to regain it within 3 days. And so if it does, that kind of negates that signal. And I said if it breaks, especially the 18-day moving average, it seems to be the thing. I don't know why, but in currencies this year, a 18-day moving average seems to be a very pivotal zone, not just in the dollar, but in the euro, but also in Australian dollar. And so this is a pivot, and we lost it on Monday. Today would be day 3. Closing below that would tell me that, okay, maybe we have some sustained time period where we could stay under this 18-day moving average. If it pops up below it, well, you know, that gets negated. And again, we've seen that happen multiple times where this 3-day rule needs to be respected, or else the direction will change. So we'll see what happens. Today is day 3. We'll see if it ends below the 18-day moving average or not. The dollar, if it keeps going up, that's going to put a lid on how far equities can go up. Oh, as we can see, the S&P 500 is already recouping its losses, it looks like. We'll see. We'll see what happens, okay? I did do another lot of... I closed... Yesterday, I closed that 366 put for November, and I collected 4 points of profit for every contract. Man, I should have kept it because I think I would have made more profit keeping it. But I used a very small percentage of those profits, about 5 to 10% of it, to buy some more UVXY puts. Now I'm in the 8 puts and the 9 puts. So we'll see. Again, these positions are small enough to be a hedge on my hedge. My main position right now is those shares on UUUU, HUT, PPC, and Ethereum. And UUUU is my biggest position out of all of them. My hedges are that caller trade, you know, the short calls and buying of protective puts. That's my main hedge. And the hedge of my hedge is my TLT spreads and my UVXY puts. My TLT spreads are not doing very well. TLT spreads, I actually bought out the short strike because they were so cheap. I got out of them at I think 9 or 10 cents or something like that. So we'll see what happens to this. And again, these positions are small enough where they're just a hedge of a hedge. My main position, again, uranium. I am still long on this. I'm still looking to buy actually some more if it gets under $5. But even with the market weakness a couple of weeks ago, we never really got. Actually, UUUU kept going up when the markets were going down about a week or 2 ago. So I don't know what to say. There's some relative strength in uranium right now, a little bit more strength than what I thought. I mean, I guess that's a good thing for us because that means we're in the profit. But now my short 7 calls are getting challenged constantly. So that's not really what I wanted to see, but it is what it is. I'll take whatever the market gives me. So that's UUUU. HUT, I'm still waiting on HUT to sell some covered calls. It keeps going into that zone. It's just trapped in this kind of $1.80 to $2 zone. We'll see. I hope it breaks out of that, and if it gets into the 3s or so, I'd love to sell some covered calls on that. HUT right now, the IV percentile is quite low, so right now there's no advantage, or there's not as much of an advantage in selling premium right now. I want to see that IV percentile go up a little bit. Implied volatility is still high, but it could be way higher. Okay, it could be way higher, and that's really when the call selling becomes extra juicy, and that's really when I want to strike on this. But I'll let you guys know whenever I do that. So that's HUT. PPPC, Pilgrim's Pride, the shame of my portfolio right now. We'll see what happens here. Speaking of PPPC, PPC, I wanted to talk about some food commodities first today. And so let's take a look at some of these food commodities that we have. One of the things that I noticed was that live cattle prices are still going up. I mean, we are in multi-year highs right now. A lot of commodities actually took a little bit of a breather and went down a bit, but cattle prices, meat prices, they're still near their highs right now. Feeder cattle still near their highs, although backing off a bit. But live cattle, no. And remember back in the summer, you know, one of our members gave us a report about lines at the auctions near the slaughterhouses. The auctions near the slaughterhouses, they had lines, and they were running auctions to, you know, from all day until, you know, the wee hours of the morning the next day, just because there's so many farmers trying to get rid of their cattle because the price of hay, the price of water, and record heat over the summer, it all culminated to them not wanting to keep their cattle longer. And they were trying to sell them off, you know, as the, you know, before they fully matured. And so maybe that's what's causing this live cattle futures to be higher in price. And again, the thesis behind the PPC buy, the Pilgrim's Pride buy, was that as beef prices go up, we usually see consumers shift to other protein types, pork and chicken. PPC is a chicken slaughterhouse. And so, you know, that was the basis of that. And again, I'm willing to hold that stock for a few years. And I think next year, I think we're probably going to have a better year when it comes to food stocks. I'm willing to hold it. I still have only an initial buy on PPC, but again, that's where the thesis comes from, is all these beef prices going up. Hog prices too. I saw a report earlier that soy meal is getting held up in certain places in America. A lot of the soy in America gets exported around the world for hog feed. And right now, because the Mississippi River water level is a little bit low, they're having a hard time getting some of these boats out onto, you know, into the ocean and, you know, in other parts of the world. Let's actually take a look at soy meal right now. Soy Meal Futures. It doesn't really show prices being high, but I think the spot soy meal is a little bit higher. This is the futures price. Soy in general is backing off a bit. Corn is still elevated, and before next planting season, if we can get to these levels right here, these higher levels from earlier in the year, I'm still willing to short corn. Will it get there or not? No, I don't know. Nobody knows, right? I'm not sure if it gets there, but if it does get there, that is a very compelling short, in my opinion, right here. Okay, that's where I can really manage my risk to reward right here. Okay, so that's food commodities in a nutshell. Let's talk about some other commodities. Oil, it's that 75-77 was our buy zone. I didn't buy. I just talked about it and I just observed. But it went up to these levels right here. So I don't know if you guys remember this line. This 94.34. This 94.34 was our level that we were looking at back in July and August, and it looks like the market just tapped it from the bottom and then kind of backed away from there. So that must be like a take profit zone for some traders, or maybe some commercial entities are locking in prices here. I do think, though, that we're going to see higher oil prices, especially right now. Diesel prices are still keep going up, even though a lot of the refineries have gone into winterization. We're seeing stockpiles of diesel go down. And if right now, I think there's an EIA report coming out in an hour or so. I'm going to be looking at that for the diesel numbers, because I think if diesel stockpiles keep going down, that could be. Remember how in the summer I told you guys, oh, crack spread, wherever gasoline goes, oil will follow. Well, now I think because it's winterization, I think wherever diesel goes, crude will follow. Okay, that crack spread is going, that diesel spread, we call it that diesel crack spread. That diesel crack spread is what's driving, I think, a lot of the crude oil markets, or will drive it for the next few months with winterization. Okay, so look out for you energy traders out there. Look out for that EIA numbers coming out in about an hour or so. I think that's going to be very telling on where the direction of crude oil goes. But I think with the diesel stockpiles coming down for winterization and just the price of diesel just staying at their highs, I think it's very possible we could see this come up. I think this is just like a retracement down from our zone here. This was the move. Retracement, I think it goes up. Okay, I'm not willing to bet on it going up. I am, however, going to short it if it gets to up here. In the front month 120, let's call it like 120 to 125 zone. But on the December contract, that would translate to about a 105 to 110 on the December contract. We'll see if we get there. If we can get there, I will be looking to short at those higher levels. All right. Nat gas coming down. Wow. Imagine this. Imagine if we had short here, guys. I mean, there's no way we would have shorted here. That'd be crazy. That'd be suicide. Well, I think it's crazy trading nat gas, period. But this would have been crazier if you had shorted here. But this was a clean back test of the break. Clean, okay? Literally clean back test. Boom, down. That was your moment to short right there, okay? I didn't take it, of course. Nat gas is just a very scary contract to trade. I mean, some of these candles, again, are $10,000 per day movements. I used to trade something like this when I was younger, but these days I stay away from this kind of stuff. But it was a huge unwind. I mean, that would have been whoever was brave enough to short here and hold would have made a good $40,000 per contract. In a matter of what? In a matter of a month? Oof, I mean, that's quite a move. This is the European nat gas contract. As you can see, it's coming down, all right? We actually talked about this in the summer. Remember, I said back in June, July, if I were a European trader, I would be buying put options on European gas. Look at that. At the time, I was saying, oh man, if I were European, I'd be buying puts around here. Where did I see? It was around here. I said I'd buy puts around this area zone right here, 140, 150 zone. I was talking about that when it was in the 200s. All right, and that would have been cheap because they were really far out the money. Those would have paid off. But I'm not a European trader. I don't have access to Euronext. But for those of you who did, and if you guys took that trade, congratulations on your part. Everybody was screaming that nat gas prices are going to keep going up. I mean, they could in the winter. We could see this go up again, but I think this was a little bit overdone. Okay, that was a little bit overdone. Stockpiles, they started raising their inventory. I think right now Germany's like 95%. They have 95% of what they of their maximum storage capacity, which is enough for them to go through all of winter. So as long as winter is mild, I don't think this is going to be an issue. If it starts spiking up again because of the weather, we could see some additional inflation pressures in Europe. Speaking of inflation pressures, the Bank of England and Great Britain came out with their inflation numbers, still extremely high. It moved back. The UK inflation numbers moved back to their 40-year high. So that is not that is not good news for them. They will have to go back to quantitative tightening, which the Bank of England has already signaled that they would do. In about 2 weeks, they're going to start tightening again after just a few weeks of just temporary QE just to stabilize their markets, their bond markets. And as we can see, this is the reaction on the Great British, on the GBP, on the British pound. We're down about 0.65% on there. Eurozone also, they revised their inflation numbers. It's still at record highs, but they revised it down just ever so slightly. And that those are revisions, so that wasn't really a market moving event. It was the UK inflation, really. It was the UK inflation, and after that number came out, we just saw the markets, the futures markets, sell off a bit into red territory after that announcement. So we'll see what happens. But the British are dealing with record high inflation, just much like us here at home. Their inflation is a little bit higher than ours, and it's still trending up for them. All right. Still, I think the chart of the day is TNX. Okay, guys, the chart of the day is still TNX. We're looking at TNX breaking out right now. It looks like it. So that is not good for tech stocks, and this 10-year that keeps going up like this is putting pressure on this chart, which is the growth versus value chart. Right now, value is outperforming growth. And so, if you guys are going to go long on stocks, I think the Dow Jones is probably your better bet. You know what index is actually surprisingly pretty strong is the small cap. Small cap is actually pretty strong. They're also not as affected by the dollar. And it's actually been holding up quite well, better than what I expected. I usually when we see these large sell-offs in S&P 500, the Russell does way worse. But that's not what we're seeing right now. I think the Russell, we talked about this back in the summer. It's a higher quality index after that June rebalance. All right. I still don't really want to go long any indices right now. We haven't seen the MOAB signal yet. You remember the mother of all buy the dips. We need to see liquidity conditions improve. However, we did notice, especially in our corporate bonds advanced decline line, that we've been seeing 2 days in a row of advances. I want to see 4 days in a row, and I want to see this really curve up before we do any temporary buy the dip, even as a very short-term swing trade, that lasts like a couple days or whatever. I still don't want to do that unless we see 4 days in a row, and then we see a little bit of a dip, and then maybe we do a long swing. But until then, nope. And MOAB, nowhere close. MOAB means we need a higher high, higher low. We have not seen that yet. We're nowhere close to that. Also for the MOAB, we need our New York high-low line to curve up above all these moving averages. And we have not had a sustained bull market since like the 60s or 70s unless this number really curves up. All right. It is, however, flattening. So it is stabilizing. So that is something worth noting. New York advanced decline line also bounced off from its lows. It is coming back down a little bit today, and then our equal weighted S&P 500 also did not make a lower low. It actually made a higher low and bounced from those levels. We'll see what that happens. We'll see what happens after that. Okay. Today, the VIX futures contracts, they did expire. We'll see what happens. Usually when this event comes, sometimes we see a little bit of volatility around it. If I see the VIX go back up to 32, are we at 32? No, we're very close. We're just, oh, wow. We're extremely close to 32. But if it starts breaking that 32, I'll reshort some at-the-money puts for November on my SPY for assignment. My plans still haven't changed at all. I'm just remaining patient. We get to VIX 32, which probably will happen if around the mid 360s, maybe 365, 364. If that happens, I'll sell those puts again. And then if we get to the 340, 345 zone, again, I'm just going to buy shares outright. Nothing really has changed on my plan on there. Also, my plan for shorting the U.S. indices still hasn't changed. 41.25. I'm still looking for 41.25. And again, our options positioning is saying that delta neutral is around here. 3,900 to 4,000 is delta neutral. We still have a lot of short puts, short gamma positioning by dealers around this 3,600 zone. So again, if we get to that 3,600, we see VIX still keep going up. We could see a panic where the market makers and dealers have to cover their short puts. So weakness will beget weakness. They will have to buy those puts back. Other market makers will have to sell those puts and then sell the underlying to even out their book. So that's why when we have large dealer negative gamma positioning, we could see an undercut of that level. We saw that actually last week. It undercut into the 3,400s, 3,500s, high 3,400s. Will it do that again? It could. It could. That's definitely a possibility. And we've been talking about that since July. We talked about that in August. We talked about that in September in the morning market memo after the September OPX. So we've been planning on this. Unfortunately, it didn't cut all the way through into those high put walls. If it had, that would have been a great buy, but it didn't. And I have to follow my rules. But it still has a chance of doing that here. It has a chance of doing that in November as well and in December. So this is a positioning that I think is going to continue into the end of the year. We still have a lot of in-the-money puts, though. So, I mean, we could see some volatility burn off. So we might see it go up above delta neutral and then go back down again. Who knows, right? Nobody knows the trajectory of the markets like that in the short term. All we can do is manage risk. But, again, that's why my plan is still the same, okay? It probably will be the same for at least until the end of the year. We short at these levels at 41.25, we buy at 3,400. That's just my range. Everything else, I'll let the gamblers gamble on that, okay? So nothing has changed. Nothing has changed, all right? Let's actually let's go back to bonds for a second. I wanted to go over TIP TLT because I think something is going on with TIP TLT. I don't know what is going on, but TIP TLT is making some really strong moves. I mean, this looks like a breakout, does it not? It looks like a breakout. Now, the best scenario for the market in the short term is if this is a false breakout, okay? Technically speaking, if this becomes a fake breakout where it just reverses very quickly back down, that would give the markets a little bit of a sigh of a relief, and it would lift the lid. It would lift the ceiling on the market. Okay, I think this is putting a lot of pressure on growth stocks right now. And as this number keeps going up and TNX keeps going up, that's just not good news for the market and for growth stocks in particular. NASDAQ really hates this, okay? The NASDAQ really hates this. I mean, we'll see. This is the weekly chart of it. I mean, does it really want to go back to these levels, back to 2008 levels, pre-2008 levels? Does it really want to do that? I don't know. And if it does, I think if it keeps going up like that into those levels, we could see the NASDAQ fall another 5 or 10%, okay? Because that is not a good signal for growth stocks, okay? And that's, back to the WIVE, that's why I think we're seeing this, a value outperforming growth, okay? So keep an eye on TIP TLT. TNX is the chart of the day still. If you're going to look at two charts, it's going to be TNX and TIP TLT. I think these are really the what's driving the market forces right now, at least on a 2 to 4 week cycle. Okay, so this is what's really driving it right now. HYG corporate credit, again, our advanced decline line in junk bonds made two advances. let's see here. Generally, if we want to see advances continue, we want to see. I noticed that the HYG, the 15-day EMA, tends to be where we see some changes in market behavior. It just tends to be a line that is, certain market conditions are more likely to happen. Like, for example, very, very weak corporate credit breadth tends to happen when we're under this 15 EMA. When we're over, that's when we usually see those big advances over declines. That's just something that I've noticed. And so right now we're just above that 15-day EMA. So if we stay there, I'm guessing we're going to have some advances, or at least the declines won't be as big. But we'll see what happens at the end of the day on HYG. All right. My plans still haven't changed. I'm still, I'm still going to acquire UUUU at lower prices, HUT at lower prices. What else is in our plan? Ford, let's see here. Ford is part of our plan as well too. It's backing down again. I still want to see under 10 to get into leaps on Ford or a MOAB signal. Probably it's best to wait for the MOAB signal, to be honest, before getting involved in any type of leap strategies. Except though, I kind of like the gold miners right now. I kind of like the gold miners, and we're revisiting that zone. If I can get a clear shot, okay, at these lows right here at like 22 on GDX, maybe if I feel a little frisky, I may play the junior miners. But again, I want to see those lows from end of September, at least get closer to it. So under 27 or so, I may get some options on this. All right. Right now, how does the skew look like for January? Yeah, there's a little bit of a call skew. So even buying call spreads will work fine on this. I may buy some in the money leaps. Okay, depending on where IV is. Right now I'm looking at anything. I like delta 65 or above. Ideally, you want delta 75, but I also want to keep at least 3-to-1 leverage. So I don't want to spend more than a third of the actual share price on each in the money leap. But they have 821 days. So I am patiently looking for an entry into this. Okay. I think gold miners are going to do well, at least temporarily, maybe the next 2 to 4 months. Okay, if we can see a little bit of stabilization in the dollar, okay? The dollar is really what drives that. Gold is not a inflation hedge. It's more like a extreme currency volatility hedge, okay? It's not an inflation hedge at all. It doesn't really do well against inflation. It does well against extreme currency risk, though, okay? That's what gold is used for. Everybody thinks it's an inflation hedge. It's not. I think that's misguided a little bit. But if the dollar can stabilize, and if it can close under this 18-day moving average today, I will look to leg in to some gold miners. And again, closing prices is what matters. So I'm going to log back in about maybe 30 minutes before the market closes and see where it's at. And if we're under this 18-day moving average, I might leg into some options plays on gold miners. Okay, so that's my updated plan on the gold miners. All right, crypto, nothing is really happening with crypto in the options market. I don't know what's going on. I guess people lost interest in gambling on crypto options, maybe. Like I said, a couple weeks ago, I think a lot of speculators just got wiped out, got wiped out because of that merge news. Everybody thought, because of the merge, it's just going to just pop up right afterwards. And I think a lot of people lost a lot of money. And remember then, too, implied volatility on those options were sky high. So people did not get the response, the price response that they wanted, and those options pretty much decayed to nothing. You know, the pros got in at the much longer dated, and remember how we saw those longer dated options getting sold like a week before the merge when the prices were really high. Yeah, so you know, all retail, you know, is always late, of course. So I think they just got wiped out, and now nobody wants to trade ETH options anymore. We're still at 5.8 billion. Yeah, 5.8. Now we're at 5.77 billion. So I mean, this is not until it gets to like 6.5 or so. The options market is not really going to do much to Ethereum. Okay. I mean, we'll see. We'll see what happens to Ethereum prices, but it's just been kind of stuck in this range. Okay, it's just been range bound like this. We'll see what happens, okay? It's about to touch the upward trend line again. The upward trend line, it is going up, the green line that we had since the summer. So right now, the green line is around 1278 right now. So if it hits there and keeps going up, we'll see. We'll see what happens. But ETH, pretty resilient. All right, I'll have to say, you know, since end of September, it's just been kind of range bound like this. Let's get rid of this EMA. But yeah, it's been kind of range bound like this for a while. All right. So my plans still haven't changed yet. I you know, remember 1241.46. That's why initial buy, very small buy. My main buy is still right here in the ETH gold chart when it gets to 0.55, 0.56. Okay. So that hasn't changed at all. Wow, look at the Japanese yen. It's still falling. My goodness. My goodness. Actually, you know what? I want to show you guys. We'll end it with this. Okay, we'll end it with this. On Twitter, I showed people this chart. Okay. I showed people this chart. Okay. And I said, just food for thought. Food for thought. What if the Bank of Japan did not really, quote unquote, lose control of the yen? What if they want the yen to come down to make Japanese exports more competitive? Okay. A strong dollar, you know, whenever you know, countries do this where they devalue their currency, you know, they get blamed for, you know, currency manipulation. Sometimes you see retaliatory, some retaliation from maybe the United States, you know, with their with the way they control their the currency. You might see other countries also try to devalue their currency against the yen, you know, or I'm just using yen as an example. But, you know, whenever a country gets blamed for currency manipulation, you know, that's usually, you know, not a good thing. Sometimes, for example, other countries will take other actions to counteract that devaluation. So I think right now, Japan could be using the strong dollar and the macro environment as a scapegoat and saying, hey, we lost control of this. You know, we have to keep monetary conditions loose because of COVID, because of this, whatever it may be. They might be using that as an excuse because, I mean, you know, just comparatively, the Nikkei is pretty strong. Okay, it's approaching 30-year highs. So maybe the Bank of Japan, maybe this is what they want. Okay, just food for thought. I have no proof of that. I have no data of this. It's just something that I thought of. You know, I was just looking at the Nikkei. I was just looking at its relative strength, and then I just thought, let's just chart it against the yen and see what it looks like. And this is what it looks like. Okay, we'll see what happens. And I think it's just food for thought. Okay, maybe this is what they want. All right. I know institutionally right now there's a lot of demand for Asian stocks right now because of valuations. I saw Morgan Stanley, JP Morgan, Goldman Sachs, they're all recommending to their clients they buy Chinese and Japanese stocks. I mean, I think it's a little late for that. It seems like if you're buying Japanese stocks, you're kind of chasing. You should have bought years ago, but that's just me. Anyway, that's all I had. Any questions, any comments, any rude remarks, anything you guys want to look at? All right, then. In that case,
What are your thoughts on crypto, bro?
what are my thoughts on crypto? Okay, so let's look at crypto again. We just got done looking at crypto, but hey, we'll look at it again. Again, from options activity, we started tracking options activity in crypto and Ethereum and in Bitcoin because we saw a huge ballooning of the open interest. And so we saw the options market start taking over price action on Ethereum. We're not seeing that anymore. Okay, Ethereum, the notional value of open interest is down. Deribit, I don't know why pieces of Deribit just don't work every day. One thing works or something else. I wish it could show this. It shows the notional value chart over time. And right now, the notional value, it topped out at around like 8 billion. So when it gets to over 6.5 to 7 billion, that's, I think, when the options market becomes a lot stronger in its control of of Ethereum's price. Right now, with notional value and trading so low, if you look at actually the block trades on Ethereum, I mean, the block trades, I think the biggest block trades in the last 24 hours was like $90-something thousand worth of options, which is really, really low. Deribit's not working again. I noticed that whenever markets open, or whenever the New York Stock Exchange opens, Deribit slows down a lot. But anyway, but yeah, so unless this number starts going up, options market is not going to give us clear signals on what Ethereum is doing. I will say, though, Ethereum, though, has been quite resilient. I'm very surprised at how resilient it is. Now, remember how I said, earlier, too, that it tends to be that small cap index and Ethereum have very similar characteristics. And even now, Russell, I think, has some relative strength as an index in the United States. And Ethereum is kind of mirroring that relative strength. Even though we had huge sell-offs in risk assets, especially here in U.S. indices, we didn't really see Ethereum sell off all that much. It's been kind of flat, okay? It's been kind of flat since end of September, okay? And in the same time period, we saw what? We saw S&P 500, do these wild moves from here, October 5th, down. I mean, that's a big move here. It's like 6-7% right there, okay? Right? Yeah, that's an 8% move. Whereas in Ethereum during that same time, I mean, we didn't see that. So I don't know what's going on. I think a lot of speculators got wiped out during the pre-merge cycle. I think they just got wiped out. All the real pros got long here. They got out around here or so, and then retail rushed in, of course, and then they got slaughtered. So I think that's probably why we're seeing the implied volatility on ETH options at a low. One of our other members who trades on Deribit quite frequently, he actually made that observation as well, that DVOL, which is their measurement of implied volatility, is at the lows. It was like in the 80s or 70s. I remember during the summer months, it was like in the 110s, 120s. So obviously, there's a little bit of a less pumping up of IV values. So I think speculators are kind of out of this market. But that doesn't mean that some of these big holders are selling. I think they're just holding. So there's really not that much volume in or out. And so that's why we're just seeing Ethereum just churn. However, I do think that this green trend line that we've had since the summer that I initially drew back in 2020, I think, though, that is a main trend line that traders are looking at. It must be, because it has really clean responses to that, okay? But again, I think the main buy, just to manage risk, even though I do think that this green line will it has a good chance of maintaining itself. If it breaks this green line, and nobody knows for sure, nobody's got a crystal ball to this. So this green line may break, and if it does, then our red trend line, ETH to gold, comes into play. And again, that's where my main buy is, 0.55, 0.56 on this ETH to gold ratio chart. You guys are more than, you guys are more than welcome to copy this. I actually post this chart on our Discord. Our invitation link is down in the description box down below. But yeah, I post this chart quite frequently. But you're willing to, you're welcome to copy this and put this on your charts, set your alerts right there, and just wait for ETH to get to there. And that's where my big buy zone is going to happen. So if we see, I don't know, some type of Fed fear, some type of risk event happening in the next couple of months, we could definitely get there. Okay. By the end of the year, it goes to 0.58. So maybe it chops around and then slowly descends to the end of the year there. It could. All right. But we'll see. All right. We'll see. Anything else? Oh, one of our members posted this link. What is this? Open interest. Open interest. What is the open interest of? Futures? Is this futures open interest?
Yeah, but that's a dated contract. That's not a perpetual. That's a 12/30 dated contract.
Oh, so this is a contract that expires?
Yeah.
So that was good. So okay, so what are you trying to tell me?
It just has more volume, right? It has the most volume right now as far as futures and options in crypto.
Options. Hold on, let me see the daily. Oh, look at that. So yeah, there is a little bit more open interest ever since actually ever since the ETH open interest on the options has been going down. This has been going up. So
right now you're on the Bitcoin perpetual. If you go in the top,
I'm on Bitcoin right now.
Yeah.
I see.
If you scroll down a lot, there's the 12/30 dated.
12/30. Oh no. I see what you mean. 12/30 dated.
Right there, you just passed it. Scroll down. Right there. There's Bitcoin and ETH.
12/30 dated. What does that mean, 12/30?
That's December 30th.
Oh, December, the date. Okay, gotcha. 12/30. Okay, got it. So quarterlies. Okay, interesting. So open interest has been increasing recently. So what are you trying to do? Is this telling me that instead of gambling on options, people are now gambling on futures?
That's exactly my takeaway from it.
No, I see. I mean, options are a little bit more complicated for retail. So I can see retail, especially if you go on social media, if you go on like Twitch and all these other streaming sites. Most of the kids gambling on crypto, they're using futures. They're using leveraged futures. I think options is just a little bit too complicated for most retail speculators. So perhaps Deribit shows us more of the more, I don't want to say sophisticated, but maybe just a little bit more sophisticated speculator. I mean, still retail and stupid. And
I know
money.
People use these dated ones for hedging passive accounts.
Okay, so they use the futures for hedging.
Specifically the dated contracts.
The dated contracts, I see. So they're long the physical, and then they short, or they do the pair trade like that. They exactly. Do the opposite of the physical trade. Okay, I see. Interesting. Okay, I can definitely see that. So like somebody who holds like ETH, they're long-term bullish on it, but short-term bearish because of the macro. So they're long their ETH, but they short. Okay, I can definitely see that. Is there, just like the CFTC posts long versus short on contracts, do they show that? This isn't it, right? That's not this, is it?
That's just specifically for that contract.
That's just specifically for this contract. Oh, it does actually. it does show you long versus short. Huh. Interesting.
If you go on CoinGlass, it's fine for the total market.
Right. Okay, so this is for this contract on Binance. Okay, so I'm gonna have to do a little bit more research on this. I didn't know they published these kind of numbers. Interesting. Okay, so we can actually see positioning, but I don't see any type of extreme positioning. But this is a daily chart. I'd want to see like weeklies, a more longer term. But okay, I'll do some more research on this, and maybe tomorrow. I do a segment on this futures positioning on Binance. Maybe we look at futures now for more market positioning data while option OI is low. So I'll do some research on this today. I'll report this on tomorrow's morning memo. Anything else you guys want to look at? Anything else? All right, well, in that case, that wraps up our session of the Morning Market Memo. Again, links to our Discord are in the description below. Come join our Discord. Be a part of a growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. If you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. I'll be back tomorrow, 9:30 a.m. at the opening of the New York Stock Exchange. See you guys tomorrow. Trade safe.